from a big picture, as the current tax law stands, basically U.S. persons are taxed on their worldwide income until the Trump administration changes this to a territorial system, if that ever happens. And non-resident aliens are basically only taxed on the income earned in the U.S. So that's where there's this distinct set of sourcing rules, which is basically these rules that say what type of payment is it and how is it sourced. Is it a U.S. payment that they would be taxed on, or is it a foreign payment that wouldn't be taxed on? And this session's covering, okay, and then do we have to withhold on those items? So what is a non-resident alien? So it can be an individual or an entity. So it can be an organization, but it's really defined as anyone who's not a U.S. person, which U.S. persons are green card holders. They might meet a resident alien, obviously a U.S. citizen. There's a substantial presence test of 183 days that actually has some nuances to that. Of course, tax law, exceptions to the exceptions. There's certain exempt individuals that have certain types of visas under A and G, and that's where the immigration attorneys come in, because we need to understand what their visas are and why they're here. Teachers and students have special rules when it comes to the time that they're here before they become a resident. It's a longer period usually. And then professional athletes that are here for a charitable reason, they actually can pick which country they feel they have a closer connection to. Also, treaties may dictate where residency is. So there's a lot of nuances on who's a resident. So that's one of the things when you're evaluating it, you do have to sit down and say, okay, is this a U.S. person or not? The other thing you need to understand is who's the withholding agent. So if you have a non-resident alien, who is going to be responsible for if there's any reporting or withholding? And that could be anyone in the chain of that payment. And it could be a U.S. organization or a foreign organization. So it's who controls that payment. So for instance, you may have an organization that's paying a college some additional payments for students, some per diems, and you need to understand, is that college, the U.S. college, or a foreign college, are they going to be the withholding agent, or is the charity going to be the withholding agent? Who's going to be responsible for that?
And that's an important point. Let's say your organization, you fill out your W-4, and lo and behold, come April, I got to write a check, right? So what if you don't? Well, they can't go after your employer because they didn't withhold enough. It's your obligation. When you have a non-resident alien, because guess what? They tend to be more transient and in their home countries by the time the tax returns are filed. So they have the right in this regime to go after the withholding agent, which is sometimes the employer, as Jennifer mentioned, could be a lot of other people in the chain. But that's really the hammer here when you say, well, what's the big deal? So before we go any further, how many people think their organizations or organizations they work with make payments to foreign persons? Okay, let's see if there's any more hands that go up when we go through some of this, because we'll get into what payments are and what the types of relationships that tend to generate these issues are.
Right, and so that withholding agent, it's important, again, we need to know what is the proper documentation we need from these individuals or organizations that are non-resident aliens. It could be, for U.S. persons, it could be W-9, a W-8, and there's a bunch of different series, B-N-E, B-N. It depends on what kind of entity or individual they are. Again, we're doing high level here. And 8233, I put this on here because most of the payments in our examples, actually that's the form that you use for the documentation, because it's for basically personal services for an independent contractor dependent individual. 8233, so most of these, the W-9, the W-8, usually just put them, you just get the information, you look at it, you review it. If you know, if it looks decent and you don't have a reason to know differently that the information is wrong, you can rely on it. And you put it in your file and you keep it on file. And 8233, you need to actually submit that to the IRS within 5 days of reviewing it, and then you wait 10 days to see if the IRS has a problem with it, and then you make the payment. So there's actually some logistics with that actual form. Again, you'll have to withhold the tax remitted to the IRS. This is something that oftentimes we find some errors on that. If it's under $200, you usually can just make that payment when you do the 1042 in March. But if it's over that, you actually have to do it monthly or quarterly, and the timing is pretty close. It could be within 5 days, 15 days after that quarter or month year end. So you kind of have to keep on top of it. Also, you're going to have some reporting requirements. The 1042, which is kind of the equivalent of a 1096, and a 1042S, which I say is equivalent to a 1099, that you're going to have to give to the individuals and report to the IRS all of the withholding that happened. And it's due March 15th, but you can get extensions. But oftentimes, we do this and, we're preparing the return in May, and all of a sudden, oh, we had these payments. What are we supposed to do with that? And we end up having to go back and clean that up. FATCA. So FATCA is under Chapter 4. Thank you, Chapter 4. And this came into place under the HIRE Act of 2010. Now, this is really a provision, it's ownership focused. The government's just trying to figure out who owns these different assets and these complex structures. And especially, like Swiss bank accounts, that's kind of the regime it came into. However, as the CPAs, we look at it as kind of asset focused because we're charged with reporting all the assets, the foreign assets. There's the 8938. Yes?
Quick. What does FATCA stand for?
Oh. Foreign Account Tax Compliance Act. There's FATCA. IRS uses acronyms, and then we start using acronyms, and there we go. And so what it generally requires is us to get documentation on the persons and where those payments are coming. This comes with banking, if you're a financial institution, FFIs, non-financial foreign entities. There's all kinds of records there. Where we're concerned is under this regime, that bold down at the bottom, it requires the payment subject to withholding rules to be reported and withheld. This is your hammer. This is why we have to do this. And so it applies first. So if we go to Chapter 4 first, and then we go to the withholding rules. So that's important. And so what you need to do is you need to make sure you have all the proper documentation for you have the W-8 on file, and that you know that you've done all your due diligence. If you don't do that, it's automatically a 30% you're withholding. If you do it, it's 0%. It's kind of this all or nothing regime. So if you go, and then there's no treaty application, it's just all or nothing. If you don't do that, if you basically go under FATCA, again, you do the 30% withholding, you don't even go to Chapter 3, because you just did automatically. Now, some payments, for scholarships, and there's certain things that don't fall into FATCA, they only go to Chapter 3, but most payments you're going to end up going from FATCA to withholding, which will take withholding.
Okay. All right, a little bit about the withholding rules here that we're going to cover. And, I'll tell you up front that the rate at which you withhold and whether or not you have to withhold depends on a number of factors. We're talking about, specifically here, we're assuming that the person is a non-U.S. person, a non-resident alien, because we're under that regime as to whether or not there's any reporting or withholding. This is where it gets, if you miss, where it can get severe is you miss these types of payments. And again, we'll get into some payments you may not think are payments, but for these purposes are. And the default rule is 30% withholding, right? So 30%. And again, if you don't withhold, they come after you for it. And in some organizations, I spent a large time in my career dealing with colleges and universities that have this issue big time. And I actually started with it long ago when they weren't addressing it, kind of all the way through to where a lot of them have very sophisticated systems. So when you're dealing with thousands of foreign students and making payments to them, you can imagine the liability could get up there very quickly. So that once they figured out the issue, they got on board pretty quickly. Now, there's a number of exceptions. As Jennifer said, there's always exceptions to the exceptions. That's why we love tax rules, right? Graduated rates for wages. But it can't just be that simple, right? Can't just be, I'm paying a non-resident alien wages. Oh, they have to fill out the W-4. The answer is yes, but they have to fill out the W-4 with special rules because they don't get the standard deduction, And the withholding rules are built for that. And so there's some rules that get you to, starting with the W-4, and they don't get to file married filing joint, so they got to file single, typically 0. And there's some rules that go in how they have to file their W-4. But in essence, it's graduated withholdings being tweaked to make up for the difference that the withholding tables don't take into account how non-resident aliens are taxed. Another exception, treaty exemption. And one of the biggest common mistakes here is we go, oh, I'm making a payment to so-and-so, but they're from, I almost said Russia just because we're in D.C. and that seems to be the foreign country that leaps to mind all of a sudden. But pick any, we have lots of treaty relationships with, European countries and some Asian countries, not a lot with South America. It just kind of historically how our trade agreements have developed. But you make a payment to somebody, you go, oh, there's a treaty, so I don't have to do anything. No, first of all, there has to be a treaty. Second of all, it has to cover that type of payment. And third of all, the person has to meet the requirements of that provision of the treaty. So you can imagine that the level of sophistication that you may need to determine that is important. And as Jennifer mentioned before, the Form 8233 is for services. Independent personal services, think independent contractor. Dependent personal services, think wages to an employee. Where we get into a lot, I think, and we'll see in the case studies or as we talk about this, W-8BEN non-service payments. What are those? What kind of non-service payments would we make? Typically, in the non-resident alien world, it's scholarships and fellowships. Okay? And we have to distinguish between qualified scholarships under 117. I'll try and limit my code sections here, but I can't help it. It's part of who I am. My wife is slowly getting me to embrace the tax geek that I am. She's like, you just need to own it. Give it up. You just need to own it. So I'm working on that. And that's why I get up here. It helps me. It's kind of a cathartic process here. So non-qualified scholarships or qualified scholarships are those for tuition, fees, books, and they're both for U.S. persons and non-U.S. persons. They're not taxable. Non-qualified scholarships are payments, in general, payments for somebody to continue their research or studies. And it's very broad. The one caveat is it's not an exchange for services. And there's a lot of payments that get made out there that you don't think are scholarships and fellowships that under the code would be scholarships and fellowships. So we'll spend some time on that. If a treaty applies, you get a W-8BEN. And you don't have to withhold, but you have to report. And there are penalties for not reporting. So just because it's not subject to tax doesn't mean it's not subject to reporting. And let's see. So yes, even if 1042S, even if a reduced rate of withholding, and when we say reduced rate of withholding, we mean even down to 0, would still require reporting there. So scholarships, fellowships, I just mentioned if it's qualified scholarships or fellowships to a non-resident alien, and again, colleges and universities have tons of these, no reporting or withholding required. But you have to determine if it's how much of the payment is tuition and fees and how much could be over that. Did I see a hand? Did we have a question over here?
I can hear.
We're going to play some music in between the time where we get the, get the microphone out.
I just want to confirm, the exception for scholarship and fellowship applies for qualified scholarships, even if they are not from a country, even if I have a graduate student who's not from a country covered by a tax treaty?
Okay, excellent question. The short answer to that is yes. So if you start first with, and one of the things we talked about is kind of giving you a framework to develop these. You go, okay, first of all, do I have a payment to a non-U.S. person? Yes. What's the type of payment? Scholarship, fellowship. First thing is it excluded by 117? If it is, you stop there. No reporting, no withholding. If it isn't, then you go to the treaty. And if you go to the treaty and there's no withholding, you still have reporting. So that's kind of, thank you for that question, because that's kind of how it goes down. And then if the answer is no, the general rule is 14% withholding on scholarships and fellowships if they're in the, how's that for a segue? If they're in the correct, or not correct, but in the appropriate immigration status for the exclusion. So you make a scholarship payment, it's not qualified, so it's potentially taxable. There's no treaty. Now we go, okay, we have to withhold, and if you have to withhold, you're going to have to report, right? If it's a non-resident, if it's a non-U.S. person, there's some exceptions on the U.S. side. So, if they're in an F, J, M, or Q immigration status, mostly you'll see F and J. They're the foreign students and the graduate students that come to the U.S. They're sponsored typically by the U.S. institution. And they'll have, and Shannon can get into all the appropriate people that you need to make sure they sign off on the right things for all the things they do here. But again, they have very sophisticated systems set up for that. If it's not F, J, M, or Q, then you're back to the 30% withholding. And I'll give you a little bit of preview on that. When you bring foreign students and scholars over to attend a conference where they're not providing services, they're not going to typically be in F, J, M, or Q because they're not here and they're only coming for a week or 2 weeks or whatever. You may be at 30% withholding on that. And we'll get into some of those. So, other immigration statuses I mentioned, 30%. And 1042S reporting is required. Now, I'm always getting, my thoughts are always getting one step ahead of the slide that's coming up. So I always have to take a pause here. Contrast that with scholarships or fellowship payments to U.S. citizens and resident aliens. Okay, so you got a kid, your kid's brilliant, they get a full academic scholarship. And you go, great. I can finally buy that new car or that vacation home, right? That's awesome. And you go, okay. Then it comes time to do their tax return. Is it a qualified scholarship? Some of it, right? Tuition, books. What about room and board? Nuh-uh, as my niece would say, nuh-uh. So what do? You take it to H&R Block and you don't tell them about it, right? No, that's not what you do. What I do is say, I can't do your return because I know too much. Having had a couple kids on track scholarships, I respectfully decline to do tax returns. That's not true. So it's taxable. So whether you're a resident alien, non-resident alien, U.S. person, it's taxable if it's over tuition and fees. If you're a U.S. person, you don't, under Notice 8731, they changed the law in 86. This notice came out the year later. It says it's taxable, but you don't have to report. So what do you think the compliance is on that side? Not great. Not great. So on that issue, it's still taxable, but there's no report. We got some questions here, and it's still taxable, but there's no reporting, so it's up to you to do that. Now, what Notice 8731 says is you should send them a letter to give them enough information so that they can properly determine their tax liability. And we strongly recommend that. You're doing a disservice to your folks if you're not giving them that information. What they do with it is not your deal. In this case, if it's a U.S. person, they can't come after you for it. But you really need to be careful in complying with Notice 8731. You want to make sure that they have that information, but you don't want to go so far as to give them tax advice if you're an organization. I know a lot of my clients they say, we'll give you all this information, we're not answering any questions. And it's hard to tell where that line is, so you want to be careful about that. Do we have any? Yeah,
we have some questions, but we're actually going to answer some of them as we go. But one of them is, if I'm paying a foreign company for non-U.S. sourced income, do we still have to collect a W-8, B, and E from the vendor? And the answer, yes.
Yeah, you want documentation, because Jennifer said documentation. The IRS comes in and said, you made a payment to a foreign entity. Why didn't you withhold 30%? The answer is, I've got documentation to show that it was not you. They were a non-resident alien, and the payment was made for services performed overseas. And we'll get into sourcing. Right, we're going to talk about sourcing. We'll get into sourcing next, but that's important.
Yeah, and there's more questions on sourcing, so we're going to talk about those.
Okay, so really important thing to know. Why did this notice came out? Well, in 86, they changed the law on what was taxable as scholarships, and they narrowed the non-taxable portion of it. Colleges and universities went crazy because they're like, oh my God, if it's taxable, I must have to report. They have a very good lobby, and so that's how Notice 8731 came about. The other thing, and this can help out in some circumstances, there is also an alternative withholding procedures under Revenue Procedure 8824. And the IRS actually has a nice page on it on their website. You can find it. You might want to try and search it by 8824. If you're here for less than a year, and in DC we see this a lot, there's exchange programs. Somebody comes in on an F or typically a J if it's an exchange program. But again, I defer to my counsel on this. And they are away from home on business, right? Typically, they're receiving a non-service payment. They're going to come and study or do research here. Well, they can't claim it's not a business expense, but there's rules that say under 8824, you can treat it as though those travel expenses, your airfare, your living expenses, your food, not your personal entertainment expenses, are business expenses. And so if you represent that to your withholding agent, the person sponsoring you, they can take, okay, we're giving you a payment of $20,000. Well, we know that $2,000 is for airfare, $5,000 is for rent, $3,000 is for food, and typically you use the per diems, the government rates for per diem. You can figure that out. So the net is $1,000. We only have to withhold on the $1,000 and not the entire $10,000 because the IRS is saying we're going to kind of equate it. We're going to try and come up with the right withholding amount based on what you ultimately would owe. One of the few places in the code, in the regs, in the tax administration, you will find some reasonableness, right? They want to try and get to the right number because the person you withhold up front, they don't get it back until they file a return, which is typically many months later. Not to mention the fact they're filing a return in something that's not their native language and many months afterwards and they don't have the information. So that can be very helpful in certain circumstances. So I went through these. If it's less than a year, you're basically claiming away from home expenses as if you were on business. And you would still have to report on the 1042-S and they still need to file a return, or the IRS will tax them on the entire amount. All right, quick thing about expense reimbursements, and we'll get into this when we get to conferences. And you go, well, I didn't pay them anything, I just reimbursed expenses. Okay, but what's your relationship with them? Not personal, just what's your business relationship with them? Just seeing if you guys are paying attention, right? And you say, well, I gave them money to go to a conference. Did they perform services for you? No. Well, the accountable plan rules that we're all used to, like for, when you pad your expenses when you go back to your offices. Oh, come on, I'm the only one that... No, I'm just teasing. I'm not the only... I know one person in here because we worked together 25 years ago, but no. So you have your expenses and it doesn't go through your W-2, right? Because it's away from home business expense, it's travel, it's business related. Well, the IRS used to say if you were a non-resident alien, the accountable plan rules didn't apply to you. And so even if, let's say you bring in a speaker, they're a non-resident alien, you give them an honorarium of $1,000. Sorry, you have to withhold on the whole thing. And that's okay because they're providing services. But what about the fact that we paid their airfare and their hotel room while they came to speak? They'd say it's all taxable. There was a general information letter back in 1998 that confirmed that you could use the accountable plan rules for non-resident alien independent contractors. And believe it or not, before that it was unclear and it made no sense. And I have a copy of the letter, but you can find it just under general information letter. So that's really important. When you talk about what your relationship is with the person, this can help. So the hint is make them provide services to you.
Sourcing. Okay, there's a few questions that maybe we can do a few questions before we move on. I think there were some questions about if you're if you pay a resident alien, should he fill out or she fill out a W-9 or a W-8? So a W-9 for the U.S. persons, which would be resident aliens or green card holders, and then W-8 is for the non-resident aliens.
This gets to sourcing here.
Yep,
you guys are really
lots
good.
Lots of sourcing, yeah. There's some questions about getting in the nuances when you're paying a foreign organization, what type of W-8B and E you get. That actually is a good question. you have to look at the entity. It's not very clear. I can't just say, oh, you do, the W8 EXP, because sometimes it is a B and an E.
Yeah.
Sometimes it's that EIY.
Intermediary, and then you get into the the exempt organizations, the EXPs with
right.
foreign governments, and
yes.
they're very
so
limited.
they're very limited. So yeah, this is not an advanced session. So what other questions? Oh, private foundations.
She's an expert. She's doing a session tomorrow with Jane Searing. I highly recommend it on private foundations. Sorry, that was a shameless plug.
We make a grant to a foreign organization. Which form does, well, that's the same one. We still need to look at the foreign organization. But we're going to talk about grants right now. Okay, sourcing. So now we have to look at, okay, what type of payment are we having? And we're going to go through the non-business types of income. So interest income generally is going to be sourced at who's making, the residence of who's making the payment. So if it's a U.S. entity making the payment, that's where it's sourced. However, the one thing I could say about interest is it's very interesting, because if you can really dive deep into what type of interest is it, that makes a difference. So if you have interest payments coming through that need withholding, that has to be looked at closely. Dividends, again, they're usually sourced to the person making the payment. Personal services, this is where we're really talking about today. And that's sourced to the country where the services are performed. So if they're a missionary abroad and they're not in the U.S., then we're not going to have withholding payments, and not reportable either. So we don't have to do the 1042. We do need to get documentation on them because we're making payments, a W8, but we may not necessarily have withholding or reporting. Rents, it's usually where the property is located. We're going to go quickly through that. Royalties is where the intellectual property, the intangible property is used. That's also a sticky area. Same with real property and personal property. Special rules, always exceptions to the exceptions. Grants. Okay. So in general, I'm actually going to start with the main point I want to make here is if it's truly just a gift to a foreign organization and it's, general, well, it needs to be restricted, but it's going to be done for that organization, that's usually not going to be, it's not going to be considered income, okay? But if you're doing targeted grants where you're saying, here is your grant, you're a private foundation, and you're making a grant to a foreign organization, and you say, well, as part of this grant, we needed you to do X, Y, and Z, and including coming to the U.S. to do convening or report or some sort of piece of that. That piece where they have to come to the U.S. needs to be carved out, because that could be withholdable or reportable. We have to figure out what that is. So that's where you're going to have to look at what is that payment. Also, you could have foreign contractors that you're paying the same thing and you're asking them to come to the U.S. to do services. Okay, tip, you normally do not want to hire a foreign contractor or have a foreign grant where the whole thing will be done in the U.S. because it's all going to be withholdable. You want to find a U.S. organization to do that.
And a related question was, if we make a grant to a foreign organization that may use a portion for people to come to the U.S. to study, I'm paraphrasing a little bit, but the U.S. organization doesn't control that, the foreign organization does. The question is whether any, I'm not sure.
So the foreign organization?
We don't have control over it. How do we treat that?
Well, usually if we don't have control over it, we're not in that chain.
Right.
Again, that chain of who has control of who's a withholdable agent.
And I think you mentioned the other one. Do I need to withhold for consultants paid by a field office traveling to the U.S. to give a presentation?
Well, it depends on what that payment is.
Yeah.
Again, we got to figure out, we got a non-resident alien payment, and then is it withholdable and reportable? So yes, possibly. Okay, now the star of our show, Shannon.
Well, as I've been sitting here listening, we've always, in the immigration space, considered our codes and our regulations almost as complex as the tax regulations. And I think that it's actually a nice comparison, because the types of visas that we have, the numbers of people that come to the U.S., it's an alphabet soup of different types of visas, B, J, M. H-1B, H-2B. You know, there are so many different ways that individuals can travel and enter the United States, and keeping that all straight, and also keeping track of all of the individuals that you're sponsoring, that are coming to visit with you, that are coming to speak at your conferences. There's just an awful lot that goes into it on the front end. Before they get here, you make that payment, and then you have to, now I understand, report or withhold or whatever it is. So, you know, immigration since January has been a very interesting and lively field. I mean, the first travel ban that came into place, it was dropped on a Friday evening at 5 p.m. We worked all weekend to identify individuals from the 7 countries who were working for our clients who may have been caught outside the country, to be able to advise them on how to handle return to the country, how to, on a move forward basis, look at whether or not they were going to travel or not. There have since been additional executive orders that have been dropped related to immigration. There have been agency announcements about trying to rid our immigration system of fraud. And even though these executive orders and these agency announcements may not on the face seem to impact your organizations directly, I would beg to differ. They impact any single organization who is sponsoring individuals on visa classifications or who are inviting people to come to the United States. One of the most recent things that Department of State has released is that there is now approval for extreme vetting of individuals who are applying for these visas at consulates around the world, and that allows Department of State to even ask for individual social media handles for the last 5 years. And we have had reports from our client base about individuals that are going in to apply for routine visas, whether that be their B visa to come here as a visitor, or whether that be their H visa to come here to work. And the level of scrutiny that is being applied far exceeds anything that we've ever seen in the past. I have to say it hasn't been detrimental to the effect that individuals haven't been able to come here or get their visa as of yet for these routine applications, but they have been substantially delayed. So we had an individual who was traveling to India for vacation, 2 weeks. He ended up having to stay there for 4 weeks until the consulate returned his passport with visa in it so he could re-enter the United States. I mean, not a big deal in the big course of everything that goes on, but the employer was out an employee for an additional 2 weeks. There was the inconvenience of the additional stay and travel, and of course the cost. So generally speaking, for today, we are going to talk about our business travelers. We're going to talk about, as Dick mentioned, some of the visa classifications that you mentioned, including the F and the J. The M is very similar to the F or the J. We won't discuss the Q, but we will also talk about the H-1B. The reason why I mentioned the H-1B today is because recently, within the last 6 months, there have been regulations passed that expand the exemptions for not-for-profits. Right now, there's a quota for H-1B visas of 65,000 per year. There were 119,000 applications made this year, but there are exemptions for a variety of different not-for-profit organizations. Those who are aware you're exempt are probably already using it, but there are expansions, so we will go over that as well. Okay. Business travelers. This could come into play in 2 different scenarios. One, if you're a multinational organization, you obviously would have individuals that are hopping on planes and traveling around the world, whether it be for business, for pleasure, hopefully not for work unless it's vetted. But understanding from a compliance standpoint and a risk standpoint what your business traveler population looks like is now critical. Secondly, for individuals who are inviting foreign nationals to come to the United States to speak at conferences, to lecture at their organizations or things like that, the B visa is also under certain circumstances, the right visa type. We'll go through how and when that is. But just thinking through how it might impact your organization. The business traveler, the one thing that is critical for everyone to understand, that it is not the duration of stay that someone is coming here that drives whether or not they're a visitor or not. It is the purpose and the activity that they will be performing while they're here. So someone could come into the United States for a period of 1 week or 2 weeks, and if they are providing a productive service here, absent an exemption, they will require a work visa, and the business visitor visa is not appropriate for someone who's coming here to provide a productive service. So short business trips with the clear intention to depart at the end of stay, typically 30 to 60 days. Many organizations will put in a vetting procedure with their legal department or their HR department for any trips that are going to exceed a certain period of time. We typically recommend, if you're traveling for 30 days, if you have individuals traveling for 30 days or more, you want someone in your organization to vet that, because what kind of business meetings or business trip would exceed 30 days if they're not providing a productive service? So you want someone to take a really close look at that. Individuals coming into the U.S., typically if they're coming in from a foreign employer, there needs to be some benefit to the foreign employer. Again, no productive employment in the United States, payment from a non-U.S. source. So while we will talk about honorarium payments, expense payments, all of those kind of things which are permissible, typically someone who's traveling in will be remaining an employee in a foreign country being paid by that organization. Individuals not from visa waiver countries must apply at a consulate for a visa, and that's where we get into the extreme vetting and making sure that you're applying for these visas far enough in advance to make sure that the invitations that have gone out, those individuals can actually join. So we recently, and I can share this with you because it was published in a variety of different social media and newspaper accounts. Baker and McKenzie represented the New York Philharmonic, and they were inviting musicians from all over the world to join in a global concert for unity. And we had musicians from Iran, Venezuela, countries where most people cannot get visas to the United States. And we had Cuba, and we had just a variety. So we started this project in January, knowing that the concert would not be until June, just so that we knew that regardless of when we got the approvals here, that individuals would have sufficient time with Department of State to get their visas. So really think through what the purpose of your invitations are, who you're inviting, what the challenges might be from an immigration perspective to get those individuals here. I'm happy to say that every musician made it here to the United States. It was a fabulous concert. We were joined by the UN, and hopefully this particular, that particular symphony will be able to perform globally in times of global need. So,
Shannon, quick question.
Yeah.
Typically, what we've seen, and Jennifer, you can weigh in, is we have a symposium, we have something like that, and we invite speakers,
Yep.
the best people in the field, and some of them may be from visa waiver countries. They come in, and we don't send them a letter inviting, or we send them a letter inviting them, but we don't get into the specifics of their immigration status. And they show up and they go, "What's your purpose of your visit?"
Yeah.
What do they say?
Okay. So like I said, there are some
They usually
limitations.
say, "I'm here to visit. I'm a tourist."
Oh, well, they shouldn't say that because
That was my point.
if they say that, they are committing visa fraud. And there are many, you could be banned from the country, you could have your visa revoked, there could be implications for the invitors as well. So you certainly, if you are part of that process where you're advising on how they should enter the country, they need to be very truthful about why they're coming, how long they're coming, what they're doing while they're here. And in that particular scenario, Dick, it's really important to understand that while under many circumstances you can offer that honorarium pay, you can offer to pay expenses, there are limitations, and the limitations include that the activities last no longer than 9 days at any single institution or organization. So they can come in and kind of do a circuit, but they can't stay in one place for a significant amount of time. The honorarium for services is conducted for the benefit of the institution that has invited, and the alien has not accepted payment or expenses from more than 5 institutions or organizations over the last 6 months. Okay, and so that's when you're coming in as a business visitor. If you exceed any of those items, we would need to start considering a different visa status.
Usually we find out after the
happened.
fact. And that's why when I say, well, what immigration status were they in? And they go, oh, I don't know. Well, that starts the issue that they probably were in, there's a good chance they weren't in the correct status. The IRS only cares whether or not you withheld and reported. Immigration cares about the activity that they did and whether or not that was appropriate for what they said. So you'd say, but I withheld. It's like, great. That's just evidence that you committed immigration problems. So.
Yeah. I'll mention this very briefly only because this is one of the exceptions where someone who's entering in B status can provide productive services. I will note that this visa classification will come under serious review. It's already been mentioned in one of the president's executive orders, so it may not be available for much longer. But there is an application process where someone who is coming here for a short duty assignment, and usually I would suggest that's 12 months or less. They're coming in, let's say, to fill a professional position for someone who's going to go on leave. They need to continue to be employed by the foreign entity, and as long as they continue to be employed by the foreign entity and they're coming to fill a professional or specialty occupation in the immigration space is an occupation that requires a degree in a specific field. So, an easy example would be an attorney who needs to have a JD, or an accountant who needs to have a CPA, or a degree related to that. That would just be an easy example of what you would need to do. But this is one of our exceptions for individuals that can come in. Again, be very, very careful. You may remember about 5 or 6 years ago, there was a huge whistleblower case with Infosys where a whistleblower within the organization was letting the U.S. agencies know that there were individuals from India traveling here on B visas, working at client work sites who were not authorized to work. So make sure you talk this through with your immigration counsel. Make sure that you're applying the right standards. Okay, F1s. F1s are interesting in a couple of different respects. Of course, the F1s who are here are typically enrolled as full-time students, and I know Dick and Jennifer were talking about the withholdings that are necessary and some of the exemptions and exceptions for F students. But if you are going to employ an F1 student, they can be employed in one of 2 ways. They can either be employed under curricular practical training. That is when they would be enrolled at the university, and there's some sort of co-op program with you that would allow them to work for you and get credit while they're working for you. And then there's optional practical training. Optional practical training can occur during the school year, on vacation or on part-time basis, or it's also issued for periods of initially 12 months post-graduation and can be extended for periods of 24 months. I mentioned this also, the STEM extensions, which get the 24 months, additional 24 months, okay, science, technology, engineering, and math. Also be careful here, they are now regulating this a bit more closely. They expanded it from a 17-month extension to a 24-month extension, but now there are a lot of employer requirements related to that sponsorship. And so there are forms that the employer will have to fill out. You need to be enrolled in E-Verify. And you will actually have to make attestations saying that you're supporting this individual isn't filling the role of a U.S. worker, and that you will report back to, you had alluded, Dick, that there are very sophisticated systems at the universities. It's called the CVIS system, where they track all of the foreign national students and their work status, who they're working with, and they want the employers to be able to report if there are any changes to that employment status.
Some of the circumstances we see, and again, Jennifer, I know, is they'll have somebody and they go, well, we hired this person who's a student at, and pick a university here or wherever, and so they're going to do some computer work for them or consulting or something like that, or the infamous intern program where we're not paying them at all. And that's a whole other issue with, Fair Labor Standards Act. What are some of the pitfalls that they could run into there? Because they say, well, they're here legally, so why can't I pay them?
Right. So from an immigration perspective, again, you're not authorized to employ and or pay a foreign national unless they have proper authorization. And you all know that for every single employee you have, that when they start with you, you fill out a Form I-9. And on that Form I-9, you're asked to identify the authorization that they have to work for you and with you. And so if they cannot present to you the proper work authorization documents, then you put the organization at risk in the event that there is an audit from ICE or the DHS Enforcement Unit, or even U.S. Citizenship and Immigration Services. Just last year, we had an organization that, and this is not abnormal, where ICE audited over 800 I-9s. They identified that there were over 75 individuals that had worked for the company for over 10 years who were not authorized to work in the United States, and the company didn't knowingly hire illegal individuals. So instead, which carries large fines and civil and criminal penalties, but instead the ICE unit just instructed them that they needed to terminate all of those individuals who were not authorized to work. So impacted their workforce, impacted the individuals, but that is the risk of employing individuals who aren't authorized to work. And if the agencies can attach anything where you knowingly employed somebody who wasn't authorized, then you're looking at even more severe penalties.
Yes, and that's a situation that we run into. Correct me if I'm wrong, I believe the work authorization for an F1 student is typically on campus 20 hours a week or less? Is that?
While they're studying.
While they're studying. So going off campus without prior approval or other things, you're the off-campus employer. That's not authorized. They may give you some documents, but those documents, if you know what to look for, will tell you that they're not authorized to work. So you have an I-9 that says yes, or you don't even get it because you say they're a consultant.
Yeah.
And you get it down those.
Well, and you have to be careful, because everyone always asks us, well, what if we just have them be an unpaid intern? Okay. Well, from an immigration standpoint, that potentially is okay, but from an employment standpoint, and I won't preach that I am an expert in that space, but having talked with my employment colleagues and the Fair Labor Standards Act, you can't employ someone in an unpaid status if you would typically hire someone and pay someone for that. So if you have an intern program where you're cycling some of the juniors through and you have that all set up and they're all unpaid and they wouldn't be doing something that you would typically hire someone for, that's fine. But if you're trying to, usually in the instance where it's a one-off and you're just trying to accommodate one person because they have the skill set you need, I mean, that's just a red flag that's probably something that you can't not pay them for. You had a question?
So one of the things I run into is we're just going to treat them as a contractor, and then we don't have an I-9 requirement, and it goes from there.
So sort of a 1099, or are they
Right.
coming through a third party?
No, they're coming in, and we're going to set them up as an independent contractor. And there's no I-9 taken then because we have no I-9 requirement for independent contractors.
Yeah. I would still argue that from an immigration perspective, that they need to have proper authorization. And so I don't know how you handle it from a tax perspective. I understand there's no I-9 requirement, but to actually pay someone regardless of their status, I would say you still need to be very, very wary of how that.
Yeah, particularly
how
if you
you
have knowledge
document
that they are in an immigration status and haven't.
Yeah.
If you have knowledge of that and you don't take it any further, you could say that you knowingly or
Right.
at least recklessly employed somebody.
And that
Right.
gets back to documentation. How are you going to protect yourself from that?
And from an immigration perspective, that individual would be risking their own immigration status here by not maintaining proper status.
You know, that's an
It's a
important-
violation of status for them to do that.
That's an important point because we don't often think of that not only are you putting your organization at risk, you may unknowingly, I mean, imagine that person's perspective who has no idea what the rules are here. Some of you are going, yeah, I feel the same way. Imagine what they're doing, and unknowingly you put them at risk. They may want to come back to back in the U.S. later. So.
Right. And I'll just point this out. You guys kind of touched on this, but notes about the status for the F and the J's. This is the only space where I give this brief blurb, and then I say, please speak to the tax experts. But this happens all of the time with organizations that are hiring the F and the J's and then converting them at a later date to a different long-term status. But do you guys want to talk about, just very briefly, this exemption for the F and the J's?
For the FICA exemption?
Yep.
Right. And generally, you could have a non-resident alien student on an FJ MRQ status, and they're working at the institution, and they get two bites at the apple, if you will, on being exempt from FICA. They get student FICA exemption, and they get the foreign student exemption. And where it typically overlaps while they're in school is during the summertime. Because the student FICA exemption only applies while you're enrolled in regularly attending classes. And then there's a mess in the summertime, if they are taking some classes, what constitutes regularly attending. And there was a whole medical student FICA issue that happened many, many years ago and dealt with this issue. But if they're a foreign student and they're still a non-resident alien, they are exempt from FICA while they're a non-resident alien if they're in FJ or Q status. The tricky thing in the administration that comes in is they stay and they're in OPT or CPT, optional practical training, curricular practical training, and then they go typically to an H-1B, and they're in between those years, and they still would qualify as a non-resident alien in that F status, for example, and then you change them mid-year. At what point do you have to start collecting FICA? And you go, oh, great, here's your H-1B. By the way, you're now going to be a resident alien, and we got to start taking FICA out of your wages back to January 1. So you just have to be aware of that and manage the expectations on it.
And what I would also mention is that there is this 5 calendar year rule. And the reason why I mention it is just because of the conundrum we have right now, where we have an overload of students and not enough longer term visas available. There are many students that end up coming here for their bachelor's and then having to go back for their master's. And there's this 5-year calendar rule. And so what I've found is that the employers are not calculating on the way in. And so there are some students who may have already gotten their bachelor's and may have already been here for 5 calendar years who are not entitled to the exemption, and then they get kind of caught up, or vice versa, where they took out withheld when they shouldn't have withheld. So as you see these F students coming in, it's important to actually make the calculation, understand their immigration history, so that you can make that calculation on a move forward basis. All right, J1s. J1s in and of themselves have many, many different uses. And so we have our trainees and our interns who come in. Both of these, the trainees typically come in and have an 18-month period of stay. They're required to have graduated from a university and have at least 1 year of full-time work experience outside the United States, or in the alternative, they can have 5 years of experience completed outside the United States. Interns, a little bit easier to bring them in, but they only come in for about 12 months. Right now, I should mention that at the close of 2016, there were additional enforcement requirements that have been applied to trainees and interns, reporting requirements, et cetera. All of the J's are managed by Department of State authorized programs, and those Department of State authorized programs have also come under a very strict review under the regulations, and so they're being asked to report back substantially to Department of State on who they're bringing in, how long they're staying, if they're converting them to longer term visas, which is not permitted under the J, et cetera. Some of the classifications that you mentioned, Dick, the teachers, short-term scholars, and others. So the teachers, and we actually represent one of the organizations that brings in these teachers, but the teachers get up to 5 years here in J status. And then we also have short-term scholars and others. The short-term scholars can come in for 6 months. Research scholars and professors can come in for up to 5 years. It's important to note that for some of these J classifications, depending upon the country you're from, there's a skills list. And what that skills list identify is if the home country requires someone with a particular skill, that individual will have a restriction on their J1 that once they finish their J1 program, they must return home for a period of at least 2 years before they can come back in any other type of visa status. And the teachers just blanketly have that 2-year home stay requirement. And that pops up very frequently when you're hiring someone new, you're hiring them out of school, they may or may not mention their J status, and then all of a sudden the immigration attorney gets all of their immigration paperwork and they see the notation that they had a 2-year homestay requirement. It is possible to get a waiver of that 2-year homestay requirement for a variety of reasons. Mostly, many of the students will go to their home country and ask for a no objection letter, so it kind of waives their ability, waives that 2-year homestay so that they can stay for a longer period of time. Depending upon the country they're from, that could be a very intensive process. China, for example, right now is, number one, they won't let the attorneys help. Yeah. Number two, so the students sort of have to do everything on their own. We can't interface for them, but it takes time.
They're worried about brain drain, people coming here and,
Yep.
and staying here. And the reason we mention some of these things too, just to give you context, is not only might you hire somebody that's in here and you might have more contact with them, but again, conferences, other consultants, other things, you need to be aware that they're out there and you need to dig further to find out, is this a type of activity that's allowed for them, or are you going to be complicit in them doing something in the U.S. that they should not be doing? And I always mention conferences because that's where they go, oh, it's just a conference,
Right.
Come on in.
Right.
Whether it could be coming from outside the U.S. in which you know, or they could already be here and you go, well, I didn't know they were not a U.S. person. Right. And this is one of the reasons we wanted to highlight that.
Right. And then just very quickly, because it does have impact to many of your businesses, the H-1B specialty occupation worker, I wanted to mention, number one, that there are, for the H-1B, there are wage requirements, and so you have to make an attestation to the Department of Labor that you're paying someone the greater of the prevailing wage or the actual wage within your organization. And so there is that wage requirement. There's also the degree requirement, and then they can, of course, stay for 6 years. And what we see more frequently than not now is that people aren't coming here to stay 6 years anymore, right? There really are very few people who are coming here to say, oh, I'm just going to work in the United States for 6 years and then I'm going to go home. No. The people who are coming really want to stay permanently. The H-1B is the stepping stone to their ability to be sponsored for permanent residency and move on from there. I had mentioned the 65,000 quota. There is an additional 20,000 available for individuals who have received their master's degrees or higher here in the United States. Both quotas for the last, I think it's 3 or 4 years, have been maxed out within the first week of filing. So that is why it's critical to understand what the exemptions are. And this was updated in November of 2016. So essentially, the exemptions are an institution of higher education is one of them. The second one is an affiliated or related not-for-profit entity. This is where the definitions were expanded. So essentially, the not-for-profit entity has to be connected to or associated with the institution of higher education through shared ownership or control by the same board or federation. The nonprofit entity is operated by an institution of higher education, or it's attached to an institution of higher education as a member, branch, cooperative, or subsidiary, or the nonprofit has entered into formal written affiliation agreement that establishes an active working relationship for purposes of research education. That's actually really important because before this regulation came into place, the definition of affiliated was fuzzy, very fuzzy. Additionally, additional exemptions apply to governmental research organizations, that a federal, state, or local entity whose primary mission is performance of basic research and or applied research. We've gotten very creative in that space, so we've taken a look for some of our not-for-profits at what their missions are and how much research occurs, as well as what some of the other missions are, and we've been able to really focus in on the research side of things to build an exemption. A primary or secondary education institution or a nonprofit entity which engages in established curriculum related to clinical training of students registered at an institution of higher education. So those are important for you guys to understand, to see, since there are so many, the quota is in existence. If you can fit in to any of these exemptions, you would not be subject to the cap, and so you could use the H-1B. As I mentioned, regardless of whether you're exempt or not, you are going to have to make statements about the payment of salary. You also will have to offer the payment of transportation costs home. So if you terminate your H-1B before their status expires, you need to be able to offer them the reasonable cost of transportation home. It's just for the individual. It's not for their family. I mean, a lot of you all may have policies already in place that identify, relocation costs, et cetera. And we always get this question, you cannot impose a penalty on an H-1B employee for separating from employment. So, we invest a lot of money in their visa status and getting them the correct visa status. You have to be really careful with your clawbacks about how to get some of that money and that funding back. That's what I've got.
Okay. Great, thank you very much. So we're going to go through a few questions and then we'll do the case studies, or at least discuss them a little bit. Question, do I need to withhold for consultants paid by a field office traveling? I think we talked about that one. You need to be careful if you've got a foreign person coming to the U.S. and you're making the payment. Even if it's through your field office, it could be attributed to you. You need to realize, and allocate the portion of that to their activities in the U.S. If we pay an artist from Canada who doesn't claim a treaty benefit, but we know there is one, do we still need to withhold? The answer is yes. The treaty exemption is really claimed on their personal tax return, and the exemption is just whether or not you have enough information to say, in anticipation of that treaty exemption, we're not going to withhold. Really good question. 1099s are required for amounts over $600. Is there a same de minimis for 1042Ss? No. There is no de minimis rule for that. So Should a per diem be taxable or reported on Form 1042-S? And we'll go through this when we talk about the structure is, are we paying a non-resident alien? If so, what are we paying them for? What is that per diem? If they're an employee or independent contractor and their per diem is under the rules for away from home business expenses, just like U.S. folks, it doesn't go into your W-2, it's not taxable, you don't need to report. But let's say you have a student that comes over and you say, you're going to do research and we're going to pay your airfare and we're going to give you a per diem. That's a non-service payment, so it's just not the title of the payment there, it's what's it for. Then potentially you would have to report and withhold on that. A good question here on financial aid. I mentioned financial aid, a full scholarship to a non-resident alien student, a portion of that is subject to withholding, either 30% or more typically 14%, because the students come in on FJM or Qs, mostly F and J. Although you could have a child of somebody who's here in another immigration status that wouldn't be FJM or Q. You have to withhold 14%. You go, but wait a minute, I didn't get a payment. They just applied it to my account. Two things. You can either gross it up for the 14%, or you can short their account 14%. They have to come up with that and then file a return and get it back later. If they get it back. So that's really the trouble with some of these expense reimbursements to non-service payments is there's withholding, but nobody gets anything, right? They don't get the money in their hands. You're paying somebody else on their behalf. So that can be tricky, and letting them know up front is really important. Are you saying an organization can get in trouble for withholding and reporting for someone on the wrong visa? Yes, they can have an immigration issue, not necessarily a tax issue if you report and withhold. Can I reimburse under accountable plans for all visa types? No, because the activity, you have to look at the activity.
Right.
Is that a fair statement?
Yes.
You have to look at the activity. So if their activity that you're reimbursing them for is not allowed under their immigration status, you may not have a tax issue, but you've got an immigration issue. Can I reimburse travel expenses using an expense payment letter under a B1 or B2? I think that gets to, yes, if they're properly in under the 9, 5, and 6 rule,
Yep.
They've got a letter of invitation, they come in, they can get an honorarium if they're a B1 and expense reimbursement, as long as you fit that rule, the 9, 5, and 6 rule that no longer than 9 days, no more than 5
institutions.
Yeah. So what is we got?
We have
no longer than 9
the days at a single
institution.
The honorarium is for the benefit and the alien of that institution, and they have not accepted payment or expenses for more than 5 institutions or organizations over the last 6 months.
Okay, I got my institutions and my months wrong. I'm like, wait a minute, it's not 5 months is a bad. So we have a question back here. So you want to set up, and I'll talk about the case study, and then we'll get the question.
Okay, so we're going to quickly go through this first case study. So your organization's hosting an annual conference. You encourage college students interested in the field, and you're going to offer to pay their hotel, transportation, and meals, and you're offering it to only the most qualified.
AICPA.
Some of those students are U.S. persons, and others are non-U.S. persons. So, Dick, were you paying attention? I don't think he was. Did we lose the clicker?
Nope, I moved it.
Okay, great. So as far as,
Can be a B2.
you know, what you're going to need to look at is this going to be a scholarship? And is it, you know, is the most qualified? How hard is that most qualified? You know, is it everyone who applies, or are you actually selecting someone to meet the scholarship provisions? And then if it's really a qualified scholarship, then you may not have anything that's reportable or withholdable. But if it doesn't meet the qualified scholarships, you might then have a reportable and withholdable payment for the 14% if they're in under the right visa.
That's a good question.
Right, and so I think in this scenario, typically speaking, we'd probably see most folks coming in on the B visa, the business visitor, or if they're from a visa waiver country, they could come in without the visa. But I would certainly suggest, as I mentioned before, being cognizant of where those students are coming from and what their immigration requirements are, so that they have enough time to plan.
Right. So the rest of the scenario, since we only have about 1 minute, it basically just tweaks the scenario to say, okay, now they're going to be required to do some research, or they're going to be part of panel discussions. And then we're starting to, the facts are starting to morph into, is this changing from scholarship to services?
Right.
And then is there an honorarium? So if we can follow those accountable plan rules for services, that's great. But if there's something above that, that may be withholdable. So that kind of gets into case study 3. Case study 4, again, now you want to offer them, basically you want them to be doing research, doing fellowships. Again, you want to make sure that you're looking at the sourcing rules and the immigration status.
Because now we're kind of transitioning to something where the business visitor is probably not appropriate.
Yeah.
And the question back here, there was a question about the B1 and B2 under the 956 rule.
Mm-hmm.
The B1 can get an honorarium, the B2 can only get expense reimbursement, if I remember correctly. But
Well, B1, B2 is, B1 is your business visitor, B2 is someone who's visiting for pleasure. Typically, if they're coming in under the B, and the same standard would apply regardless of whether they're B1, B2.
And the follow-up question was, sometimes we don't find out this stuff till after the fact. What do we do? And I always say, well, at least adhere to the tax rules, because you can always make the IRS go away with a check. If you have an immigration issue, did you find out after the fact?
Yeah, I think from an immigration perspective, if the individual has come and gone and you did not know anything about it until that individual had left, really the compliance risk to you is going to be nil. If the person is still here and you've identified that they're not here in the right status, then you need to start thinking about and you want to keep them here longer. What status do we need to change them to, and what are the implications of the status that they entered under?
Okay. Well,
All right, we'll stay around for a little bit. Thank you all very much. Enjoy lunch.